Hello everyone. This is the pre-market report video for today, 22nd March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Only yesterday, after 2-3 days sell-off, Nifty reclaimed the 22,000 mark. Now today, again early morning 3 a.m. Indian Standard Time, despite the positive US market close, which we'll discuss in detail in the moment, GIFT Nifty closed at 22,034, meaning equating it with the spot market, indicating gap down opening of 60 to 80 points. All because of Accenture. Revenue-wise in the IT service space, Accenture is the number one company in the world, second TCS, then sometimes Infosys, and sometimes Cognizant comes as third. So, being the market leader in the sector, Accenture words always carry the weightage. Now, last night, because of the high interest rate and uncertain economy in both Europe and US, Accenture said the IT and consulting service business this year are having the sluggish demand. And also, earlier they gave the revenue growth guidance of 2 to 5% for the full calendar year 2024. That now they reduced it to just 1 to 3%, which in turn made the Accenture stock to drop over 8.5%. As a consequence, Indian ADR in US also crashed. Infosys dropped near 4% and Wipro, not Infosys bad, but it also dropped slightly above 1.5%. Here, the surprising thing is, in Indian market yesterday, HDFC Bank closed positive of 1%. Last night in ADR, it also closed negative, and ICICI Bank ADR closed more negative than yesterday's Indian market. Regarding the reason, same as what's happening in the last 2-3 weeks. As long as banks got this credit crunch issue, things not going to improve at least till the time of releasing the earnings results. For example, MK Global is one of the reputed and influential Indian financial service company. Yesterday, they released the report that because of this credit issue, now deposit war among Indian banks is set to intensify more. If required, please pause and have a look. In the calendar year 2024, the difference, or we can say deficit, between the deposit and credit growth expect to increase over 10%. And only in the middle of 2025 calendar year, they said it might come back to normal. And because of that, banks has to increase their deposit rate to attract the customers, and that will impact negatively on the net interest margin. So basically, as I said, either government has to increase the capital expenditure to create the money rotation into the banks, which is unlikely now due to the election time, or banks has to post a phenomenal results. Those only will turn the banks back to positive. Till that time, I think this credit issue will cause negativity among all the banks. Anyway, moving to US market. We know yesterday we discussed in detail about the Fed chairman's dovish comment related to interest rate and inflation. So that positivity again spilled over yesterday as well. In addition, semiconductor company Micron Technology posted a surprising very good quarterly profit, and also they gave a very good future forecast guidance, which in turn made the stock price to increase around 14%, and as a whole the semiconductor sector index increased 2.9%. However, US 16 states together with Department of Justice filed a lawsuit against Apple for monopolizing the smartphone market, which crashed the Apple stock price to over 4%. Here, because Apple is the index heavyweight, which trimmed some positivity. In the end, Dow Jones increased 0.68%, S&P 500 up by 0.32%, and Nasdaq increased 0.2%. In case of VIX, it's roughly same as day before yesterday night, around 13. And oil also haven't changed much. At the time of this video, WTI crude trading around $81 per barrel, and Brent crude trading around $85.5 per barrel. So those were the things happened yesterday and last night in the global market. Now let's look at the new India specific information. First one, it's for the overall market. We know when we invest in mutual fund, we invest in specifics like small cap fund, mid cap fund, and hybrid fund, etc. And lately, Association of Mutual Fund recommend to reduce the acceptance for the small cap fund, which now in the last 2-3 weeks, one of the main reason for the small and mid cap crash in the Indian market. Similar to that, yesterday in the aftermarket hours, SEBI asked the Association of Mutual Fund AMFI to stop accepting the inflow funds that to invest in the overseas ETFs from April 1st onwards. I mean, they did cited various reasons like the funds now crossed the SEBI's guidance limitations, etc. I don't want to go too much in detail. It means now that SIP or those funds which intend to go overseas spot will expect to come into the domestic market. It can be either to equity market or debt market, but not going overseas will reduce the pressure on Indian rupee, and also in the present scenario more probably will come into the large cap equity fund. Again, that's for the short term, but I am explaining my prognosis. Anyway, it was released yesterday. Let's see how investors and financial channels are reacting to it. Then we can quantify it. Second, if required, please pause and read it fully. Yesterday in the aftermarket time, Motilal Oswal maintains the buy rating for Reliance with a target price of above 3,200 rupees per share. Here, they also cited various other reasons. So possibly Reliance might be on focus today, but as a GDR last night, it closed around flat. Third, I know I said negative about IT sector due to Accenture guidance. However, last night, as per Money Control website, TCS signed a 7-year strategic partnership with a Denmark-based company called Ramboll to streamline Ramboll's IT operating model. So possibly it might trim some IT sector negativity. Fourth, PSU stock called Bharat Dynamics and their board approved 1:2 stock split and the interim dividend of 8.85 rupees per share. So that stock will be on focus. Fifth, NMDC reduced iron prices by 200 rupees per ton for lump ore variety and 250 rupees per ton for fines variety. And here generally for a mining company, if they reduce the ore price means then market don't like it. So NMDC will be on focus as well. Finally, yesterday M&M and the Adani Total Gas subsidiary signed the pact for setting up the EV charging stations across India. As a summary, global momentum and US market turned positive now, but the local major influential sector, both banks and IT, showing some weakness, which in turn on the GIFT Nifty, it's indicating the gap down opening of 60 to 80 points. Moving on, yesterday as per stock open interest, Shriram Finance, Infosys, HDFC Life Insurance, Petronet LNG and Maruti Suzuki got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Coromandel International, Hindustan Copper, Britannia Industries, IRCTC, REC, PFC and GMR Airports Infra got an increase in open interest with a positive price close indicating the long build-up. About the things to look out. At present, just now Japanese inflation comes in line with the expectation and in January month it was just 2%. That now increased to 2.8%. So there is a chance Asian market might react to that. It's literally just released now. Then during our market hours at 12:30 p.m., UK's retail sales data and Germany's business sentiment data is scheduled to release. And in the aftermarket hours, first at 5 p.m., Indian Bank's bi-weekly loan and deposit growth for US market. Don't know why and where Fed Chairman's another interview are some of the items we need to keep an eye out today. One more thing, again yesterday as a second day in a row, DA was net buyers and FIA was net sellers. I mean DA net bought for 3,210 crore rupees while the FIA is net sold for 1,830 crore rupees. Coming to technical, yesterday Nifty opened 150 points gap up near 22,000 and closed around 22,000. Thus on the daily chart, Nifty formed a small bullish candlestick pattern with upper and lower shadows. Technically, this pattern indicates a pullback rally in the market post downward correction. Having negated the bullish pattern like higher tops and bottoms recently, the present pullback is expected to form a lower top in the next few sessions. Hence, the further upside from here could pull Nifty towards the crucial overhead resistance around 22,150 to 22,200 level in the short term. However, any decline from here could drag Nifty down to 21,700 level again in the near term. Then in case of Bank Nifty, it opened 360 points gap up, climbed back above the 50-day exponential moving average and finally snapped a 9-day negative and closed at the same place as the opening around 46,700. Thus on the daily chart, it formed a doji sort of candlestick pattern which means indecisive, But after 9 days of lower high and lower low formation, Bank Nifty formed the first higher high and higher low formation, indicating the weakening bearishness. Thus, over the short term, it could move towards 47,000, and a decisive move beyond 47,000 might propel it towards 47,700. On the lower side, support is at 46,300. Then on the weekly options front, the maximum call option open interest was at 22,000 strike, followed by 22,100 and 22,300 strike, with meaningful new call option writing at 22,000 strike and then 22,100 and 22,500. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 21,900 strike and 21,500, with new put option writing at 22,000 strike and then 21,900. Thus, from the options data, 22,000 is expected to be a crucial point for further market direction, with resistance around 22,100 and then 22,300, with immediate support near 21,900. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.